Question 1. Upon reviewing current economic indicators and media reports suggesting potential shifts in interest rates, a licensed real estate agent in Queensland is advising a client on a significant property investment. Which of the following approaches best demonstrates professional competence and adherence to Queensland's property services legislation when discussing the impact of interest rates? Option A. Suggesting that the client ignore interest rate fluctuations, as they are too complex to predict and will not significantly impact long-term property values in Queensland. Option B. Advising the client to focus solely on the potential for capital appreciation driven by low interest rates, while downplaying any discussion of increased borrowing costs or potential market downturns if rates rise. Option C. Recommending immediate property acquisition or disposal based on general media speculation about interest rate movements, without a detailed client assessment or market-specific analysis. Option D. Conducting a thorough assessment of the client's financial situation and investment goals, then providing a balanced explanation of how potential interest rate changes could affect property values, borrowing costs, and rental returns within the specific Queensland market context, highlighting both opportunities and risks. Correct answer is D. Conducting a thorough assessment of the client's financial situation and investment goals, then providing a balanced explanation of how potential interest rate changes could affect property values, borrowing costs, and rental returns within the specific Queensland market context, highlighting both opportunities and risks. Explanation. Scenario analysis. This scenario presents a professional challenge for a Queensland real estate agent advising a client on property investment. The core difficulty lies in translating macroeconomic shifts, specifically interest rate changes, into actionable, client-specific advice that aligns with regulatory obligations and ethical duties. The agent must navigate the complex interplay between market sentiment, economic indicators, and the client's individual financial circumstances and risk tolerance, all while adhering to the principles of disclosure and competence mandated by Queensland's property services legislation. Misinterpreting or inadequately communicating the impact of interest rates could lead to poor investment decisions for the client and potential breaches of professional conduct. Correct approach analysis. The best professional practice involves a comprehensive assessment of the client's financial position and investment goals, followed by a nuanced explanation of how current and projected interest rate movements might affect property values, borrowing costs, and rental yields in the specific Queensland market. This approach requires the agent to demonstrate competence by understanding the economic principles at play and their local application. It aligns with the Queensland Property and Other Legislation Amendment Act 2017 and the Property Occupations Act 2014, which mandate that agents act honestly, exercise due care and skill, and provide advice that is in the best interests of their clients. This includes a duty to disclose material facts, and the impact of interest rates on affordability and investment returns is undeniably material. The agent should explain both potential upward and downward pressures on property values and the implications for mortgage repayments and investment viability, empowering the client to make an informed decision. Incorrect approaches analysis. Advising solely based on general media speculation about interest rates without considering the client's specific financial situation or the nuances of the Queensland property market is professionally deficient. This approach fails to meet the duty of care and skill, as it relies on unverified information and ignores the individual needs of the client. It could lead to advice that is inappropriate or even detrimental to the client's financial well-being. Recommending a specific property purchase or sale solely because interest rates are perceived to be at a certain level, without a thorough analysis of the property's intrinsic value, the client's capacity to service a loan under various interest rate scenarios, or the broader market conditions, is also unacceptable. This approach prioritizes a transaction over sound investment advice and potentially breaches the agent's duty to act in the client's best interests. It also risks misrepresenting the property's suitability, focusing exclusively on the potential for capital growth driven by low interest rates, while neglecting to discuss the increased risk of capital depreciation if rates rise, or the impact on ongoing holding costs, presents an incomplete and potentially misleading picture. This selective disclosure fails to provide the client with a balanced understanding of the investment risks and rewards, contravening the ethical obligation to be transparent and comprehensive in advice. Professional reasoning. Professionals in Queensland's real estate sector should adopt a client-centric approach. This involves first understanding the client's financial capacity, risk appetite, and investment objectives. Subsequently, they must apply their knowledge of the Queensland property market and relevant economic principles, such as the impact of interest rates on demand, supply, and borrowing costs. Advice should be tailored, transparent, and comprehensive, covering both potential benefits and risks. Regulatory compliance, particularly under the Property Occupations Act 2014, necessitates acting with honesty, integrity, and due care and skill, ensuring that all advice is in the client's best interests and supported by a reasonable basis. Question 2. When evaluating mortgage options for a client purchasing a residential property in Queensland, what is the most responsible approach for a real estate agent to take regarding the explanation of fixed rate, adjustable rate, and interest-only mortgages? Option A. Recommend the mortgage type that offers the lowest initial repayment, assuming this will be most beneficial for the client's immediate cash flow. Option B. Conduct a detailed assessment of the client's financial situation, risk tolerance, and future financial goals, and then clearly explain the implications, benefits, and risks of each mortgage type in the context of their specific circumstances. Option C. Advise the client to choose the mortgage product that the agent believes offers the best return for the lender, as this indicates a strong financial product. Option D. Present the features of each mortgage type without delving into the client's personal financial details or discussing potential risks, as this is the lender's responsibility. The correct answer is B. Conduct a detailed assessment of the client's financial situation, risk tolerance, and future financial goals, and then clearly explain the implications, benefits, and risks of each mortgage type in the context of their specific circumstances. Explanation. Scenario analysis. This scenario presents a professional challenge for a Queensland real estate agent advising a client on mortgage types. The challenge lies in understanding the client's financial situation, risk tolerance, and long-term goals to recommend the most suitable mortgage product. Misalignment between the client's needs and the mortgage structure can lead to significant financial distress, impacting the client's ability to service the loan and potentially leading to default. The agent must navigate the complexities of fixed rate, adjustable rate, and interest-only mortgages, ensuring the advice is not only legally compliant but also ethically sound and in the client's best interest, adhering to Queensland's property and consumer protection laws. Correct approach analysis. The best professional approach involves thoroughly assessing the client's financial circumstances, including their income stability, existing debts, saving, and future financial projections. This assessment should then be used to explain the implications of each mortgage type in the context of Queensland's property market and the client's specific situation. For instance, a fixed-rate mortgage offers predictability in repayments, which is ideal for clients prioritizing budget certainty and who may be concerned about rising interest rates. An adjustable-rate mortgage might be suitable for clients who anticipate their income increasing or who believe interest rates will fall, but the risks of payment increases must be clearly articulated. An interest-only mortgage could be considered for investors seeking to maximize cash flow, but the agent must ensure the client understands that the principal is not being repaid and that they have a clear plan for repayment upon the interest-only period ending. The agent's role is to educate, not to dictate, empowering the client to make an informed decision based on a comprehensive understanding of the risks and benefits of each option, aligning with the principles of responsible lending and consumer protection under Queensland legislation. Incorrect approaches analysis. Recommending a mortgage type solely based on the lowest initial repayment, without a full understanding of the client's long-term financial capacity or risk tolerance, is professionally unacceptable. This approach fails to consider the potential for payment shock with adjustable-rate mortgages or the principal repayment risk with interest-only mortgages, potentially leading to financial hardship for the client. Suggesting a mortgage product based on the agent's personal preference or a perceived commission advantage, rather than the client's best interests, constitutes a serious ethical breach. This prioritizes the agent's gain over the client's financial well-being and contravenes the duty of care owed to the client under Queensland consumer law. Advising a client to choose a mortgage type without clearly explaining the associated risks, such as the potential for increased repayments with an adjustable-rate mortgage or the lack of principal reduction with an interest-only mortgage, is also professionally deficient. This lack of transparency prevents the client from making a truly informed decision and may violate disclosure requirements under Queensland's consumer protection laws. Professional reasoning. Professionals should adopt a client-centric decision-making process. This involves active listening to understand the client's needs, goals, and risk appetite. A thorough fact-finding exercise is paramount, gathering comprehensive financial information. Subsequently, the professional should clearly explain the features, benefits, and, crucially, the risks of each relevant product in plain language, tailored to the client's understanding. This educational approach empowers the client to make an informed choice. The professional's role is to guide and advise, ensuring the chosen product aligns with the client's circumstances and regulatory requirements, always prioritizing the client's best interests. Question 3. The analysis reveals that a developer in Brisbane, Queensland, has acquired a parcel of land zoned for low-density residential use. They intend to construct a small boutique hotel, which appears to be a use not explicitly permitted under the current zoning designation as outlined in the Brisbane City Plan 2014. What is the most appropriate course of action for the real estate professional advising the developer? Option A. Immediately consult the Brisbane City Plan 2014 and engage with Brisbane City Council planning officers to determine the feasibility of a material change of use application or other approval pathways for a boutique hotel in a low-density residential zone. Option B. Proceed with submitting a development application for the boutique hotel, assuming that the council will consider the proposal favorably given its potential economic benefits to the area. Option C. Advise the developer to proceed with the construction of the hotel, arguing that the land has been in the family for generations and has historically been used for various commercial activities, implying a right to continue such use. Option D. Recommend that the developer commence preliminary site works and marketing for the hotel, with the intention of addressing any zoning issues only if they arise during the construction phase. The correct answer is A. Immediately consult the Brisbane City Plan 2014 and engage with Brisbane City Council planning officers to determine the feasibility of a material change of use application or other approval pathways for a boutique hotel in a low-density residential zone. Explanation. The analysis reveals a common professional challenge in Queensland's real estate sector, navigating the complexities of zoning laws and land use regulations when a proposed development appears to conflict with established planning schemes. This scenario requires careful judgment due to the potential for significant financial implications, legal challenges, and community opposition if zoning requirements are not properly understood and addressed. The interplay between the Queensland Planning Act 2016, local government planning schemes, and the specific development proposal necessitates a thorough and compliant approach. The best professional practice involves a proactive and comprehensive review of the relevant local government's planning scheme and any associated development approvals or conditions that may apply to the specific parcel of land. This includes identifying the current zoning designation, understanding the permitted uses within that zone, and scrutinizing any overlay maps or specific policies that might impact the proposed development. If the proposal appears to be inconsistent with the planning scheme, the correct approach is to engage with the local planning authority early to understand the process for seeking a variation, amendment, or alternative approval pathway, such as a development application for a material change of use or a variation request. This aligns with the principles of transparency and due diligence mandated by professional conduct and the Queensland Planning Act 2016, which emphasizes adherence to planning schemes and the proper application process. An incorrect approach would be to proceed with the development based on a superficial understanding of the zoning, assuming that minor deviations are acceptable without formal consultation or application. This fails to acknowledge the legal framework established by the Queensland Planning Act 2016, which requires development to be consistent with the planning scheme unless an approval for a variation is obtained. Another incorrect approach is to rely solely on informal advice from individuals not directly involved in the planning authority's decision-making process, as this bypasses the statutory requirements for development assessment and could lead to significant noncompliance. Furthermore, attempting to grandfather the development based on past practices or perceived leniency without verifying current regulations is a serious ethical and legal failing, as planning laws are subject to change and require strict adherence. Professionals should adopt a decision-making framework that prioritizes understanding the regulatory landscape first. This involves identifying all relevant legislation and planning instruments, conducting thorough due diligence on the specific property and its planning context, and seeking expert advice when necessary. Engaging with the local planning authority early in the process, even when a proposal appears to be non-compliant, is crucial for understanding potential pathways to approval and avoiding costly mistakes. This proactive and compliant approach ensures that developments are undertaken ethically and legally, protecting both the client's interests and the integrity of Queensland's land use planning system. Question 4. Operational review demonstrates that a licensed real estate agent in Queensland is advising a potential buyer on the likely market value of a residential property, which valuation method, when applied appropriately, best aligns with the agent's regulatory obligations and professional duty to provide accurate market insights in Queensland. Option A. Determining the property's value based on its historical purchase price and a general inflation adjustment. Option B. Calculating the cost to rebuild the property, less depreciation, and adding the land value. Option C. Estimating the property's value based on its potential to generate rental income and market yields. Option D. Analyzing recent sales of comparable properties in the same neighborhood, adjusting for differences in features and condition. Correct answer is D. Analyzing recent sales of comparable properties in the same neighborhood, adjusting for differences in features and condition. Explanation. This scenario presents a professional challenge because a licensed real estate agent in Queensland is tasked with providing a valuation for a property to a potential buyer. The challenge lies in selecting the most appropriate valuation method that aligns with professional standards and regulatory requirements in Queensland, ensuring the buyer receives reliable and ethically sound information. The agent must navigate the nuances of different valuation methodologies to avoid misleading the client. The most appropriate approach in this scenario is the comparative market analysis. This method involves analyzing recent sales of similar properties in the immediate vicinity, taking into account differences in size, condition, features, and location. This approach is correct because it directly reflects current market conditions and buyer behavior in Queensland. The Property Occupations Act 2014, QLD, and associated regulations mandate that agents provide accurate and honest advice. Using comparable sales data provides a realistic market value, fulfilling the agent's duty of care and avoiding misrepresentation, which is a breach of ethical obligations and potentially the act. Using the income approach would be inappropriate and potentially misleading in this context. While useful for investment properties, it relies on projected rental income and yields, which are speculative and may not accurately reflect the property's value to a typical owner-occupier buyer. This method does not directly address the current market demand or recent transactional evidence for similar residential properties in Queensland, potentially leading to an inflated or deflated valuation. The cost approach, which estimates the cost to replace the property, is also not the best fit for this scenario. This method is primarily used for unique properties, new constructions, or insurance valuations, where comparable sales data might be scarce. Applying it to a standard residential property without considering active market transactions would fail to capture the true market value as perceived by buyers and sellers in Queensland, thus not providing a reliable basis for a buyer's decision. This could be seen as a failure to provide accurate and relevant information as required by professional conduct standards. Professionals should adopt a decision-making process that prioritizes the most relevant and reliable data for the specific purpose of the valuation and the client's needs. In Queensland, for a standard residential property valuation for a buyer, understanding recent market activity through comparable sales is paramount. This involves a thorough understanding of the local market, the Property Occupations Act 2014, QLD, and the agent's ethical obligations to provide truthful and informed advice. Question 5. Implementation of a property sale in Queensland involves two unrelated individuals purchasing a residential property together. They have expressed a desire to own the property together, but have not specified the exact legal structure of their co-ownership. As a Queensland licensed real estate agent, what is the most appropriate approach to advise them on their ownership structure? Option A. Advise them that they will be joint tenants, which means the property will automatically pass to the survivor upon the death of one owner, as this is a common way for people to own property together. Option B. clearly explain that their ownership will be as tenants in common, detailing that each will own a distinct, undivided share that can be independently managed or transferred, and that this structure allows for their individual intentions regarding inheritance to be maintained. Option C. Recommend that they seek independent legal advice from a Queensland solicitor only after the contract of sale has been signed and exchanged. Option D. State that they will simply own the property together, and that the specifics of how their ownership is legally structured are a minor detail that can be sorted out later. The correct answer is B. Clearly explain that their ownership will be as tenants in common, detailing that each will own a distinct, undivided share that can be independently managed or transferred, and that this structure allows for their individual intentions regarding inheritance to be maintained. Explanation. Scenario analysis. This scenario presents a professional challenge for a Queensland real estate agent due to the potential for misinterpreting or misrepresenting the nature of property ownership. Failing to accurately explain the distinctions between various ownership types can lead to significant legal disputes, financial losses for clients, and damage to the agent's professional reputation and licensing. The agent must possess a thorough understanding of Queensland's property law concerning these ownership structures to provide competent advice. Correct approach analysis. The best professional practice involves clearly and accurately explaining to the potential buyers that while they will both hold title to the property, their ownership will be as tenants in common. This means each buyer will own a distinct, undivided share of the property, which can be independently dealt with e.g., sold, mortgaged, or bequeathed in a will. This approach aligns with the principles of the Land Title Act 1994, QLD, and common conveyancing practices in Queensland, ensuring transparency and informed decision-making for the buyers. It respects their autonomy to hold property in a way that suits their individual circumstances and future intentions. Incorrect approaches analysis. Presenting the ownership as joint tenancy without qualification is professionally unacceptable. Joint tenancy implies a right of survivorship, where upon the death of one joint tenant, their interest automatically passes to the surviving joint tenant, irrespective of any will. This fundamentally differs from tenancy in common and could lead to unintended consequences for the buyer's estates and beneficiaries, contravening their likely intentions and potentially breaching the agent's duty of care under Queensland's property law and the Property Occupations Act 2014, QLD. Suggesting that the buyers will simply own the property together, without specifying the form of co-ownership, is also professionally deficient. This vague statement fails to educate the buyers on the critical legal implications of their chosen ownership structure. It omits essential details regarding the divisibility of their interests and their ability to dispose of their share independently, which are core distinctions between joint tenancy and tenancy in common under Queensland law. Recommending that the buyers seek independent legal advice after the contract is signed, without first providing a clear explanation of the ownership options, is a missed opportunity for proactive client education. While recommending legal advice is always prudent, the agent has a professional obligation to provide accurate preliminary information regarding property ownership types as part of their service, particularly when facilitating a transaction in Queensland. Delaying this crucial information until after the contract is signed can lead to buyers feeling pressured or misled if they later discover the implications of their chosen ownership structure. Professional reasoning. Professionals should adopt a client-centric approach that prioritizes clear, accurate, and timely communication. This involves understanding the client's objectives and then explaining how different legal structures, such as tenancy in common and joint tenancy, can achieve those objectives, highlighting the specific implications under Queensland law. Agents should proactively educate clients on fundamental aspects of property ownership before contracts are finalized, ensuring informed consent and preventing future disputes. When in doubt or when complex legal nuances are involved, recommending independent legal advice from a qualified Queensland solicitor is a crucial step in the decision-making process. Question 6. To address the challenge of accurately classifying real estate for regulatory and transactional purposes in Queensland, a property professional is presented with a property that includes a detached dwelling, a large shed used for storing agricultural equipment, and several hectares of land currently used for grazing livestock. The owner occasionally uses the shed for minor repairs on their personal vehicles. Considering the Property Occupations Act 2014 QLD and its implications for property classification, which approach best ensures professional compliance and client protection. Option A. Classify the property as agricultural, based on the significant land area dedicated to grazing and the primary use of the shed for agricultural equipment, while acknowledging the dwelling as a secondary feature for the property's caretaker. Option B. Classify the property as residential, given the presence of a detached dwelling, and consider the shed and land use as ancillary to the residential purpose. Option C. Classify the property as industrial, due to the presence of a shed which could be interpreted as a workshop for repairs, regardless of its primary use. Option D. Classify the property based on the owner's occasional personal use of the shed for vehicle repairs, deeming it a mixed-use property without further detailed classification. The correct answer is A. Classify the property as agricultural, based on the significant land area dedicated to grazing and the primary use of the shed for agricultural equipment, while acknowledging the dwelling as a secondary feature for the property's caretaker. Explanation: to address the challenge of accurately classifying real estate for regulatory and transactional purposes in Queensland, a property professional must demonstrate a thorough understanding of the distinct characteristics and legal definitions that differentiate residential, commercial, industrial, and agricultural properties. This scenario is professionally challenging because misclassification can lead to significant legal repercussions, breaches of professional conduct, and financial detriment for clients. The Queensland Regulatory Framework, particularly the Property Occupations Act 2014, QLD, and associated regulations, mandates specific duties and disclosures based on property type. The best professional practice involves meticulously evaluating the primary use and intended purpose of the property, supported by objective evidence and relevant legislation. This approach ensures compliance with disclosure obligations, accurate marketing, and appropriate transaction handling. For instance, a property primarily used for dwelling purposes, even if it has a small home office, would be classified as residential. If a property's main function is for business operations, such as retail or office space, it falls under commercial. Properties dedicated to manufacturing, warehousing, or production are industrial. Land primarily used for farming, livestock, or horticulture is agricultural. This detailed assessment prevents misrepresentation and upholds client trust. An incorrect approach would be to classify a property based solely on the owner's current, potentially temporary, use without considering its inherent nature or zoning. For example, classifying a property as residential simply because the owner lives there, even if it is zoned for commercial use and has historically been operated as a business, would be a failure to adhere to the objective classification criteria. This could lead to breaches of the Property Occupations Act 2014, QLD, regarding accurate representation and disclosure. Another unacceptable approach is to classify based on superficial features or the presence of a single element. For instance, labeling a property as agricultural solely because it has a few fruit trees, when its primary purpose and zoning are residential, is misleading. This ignores the predominant use and legal definition, potentially violating consumer protection laws and professional standards. Furthermore, classifying a property based on the agent's personal preference or convenience, rather than a rigorous assessment against legal definitions and zoning, is unprofessional and unethical. This disregard for objective criteria can result in incorrect marketing, misinformed buyers, and potential legal disputes, undermining the integrity of the real estate profession in Queensland. Professionals should employ a decision-making process that prioritizes legislative definitions, zoning regulations, and the property's predominant and intended use. This involves gathering all relevant documentation, consulting with local council zoning information, and applying a systematic evaluation framework to ensure accurate classification and compliance with the Property Occupations Act 2014, QLD. Question 7. Examination of the data shows that a rental property in Brisbane, Queensland, has a significant ongoing pest infestation that requires professional treatment, and several essential repairs are pending. The landlord is eager to secure a tenant quickly to minimize vacancy periods. As the property manager, what is the most ethically and legally sound approach to marketing and leasing this property? Option A. Prioritize the landlord's desire for a rapid lease signing by omitting details about the pest infestation and repairs until after the lease agreement is executed. Option B. Only disclose the pest infestation and pending repairs to prospective tenants after they have submitted an application and expressed strong interest in the property. Option C. Fully disclose the extent of the pest infestation and the pending repairs to all prospective tenants during inspections and in all marketing materials, allowing them to make an informed decision before applying. Option D. Downplay the severity of the pest infestation and the required repairs to encourage prospective tenants to apply and sign a lease agreement quickly. The correct answer is C. Fully disclose the extent of the pest infestation and the pending repairs to all prospective tenants during inspections and in all marketing materials, allowing them to make an informed decision before applying. Explanation: this scenario presents a professional challenge because it requires a property manager in Queensland to balance the immediate financial interests of a landlord with their statutory obligations and ethical duties to prospective tenants. The pressure to secure a tenant quickly, especially in a competitive market, can create a temptation to overlook or downplay significant issues. Careful judgment is required to ensure transparency, fairness, and compliance with Queensland's property law and ethical standards for real estate agents. The best professional approach involves a commitment to full disclosure and adherence to the Residential Tenancies and Other Legislation Amendment Act 2020, QLD, and the Property Occupations Act 2014, QLD. This means proactively informing all prospective tenants about the known issues with the property, such as the ongoing pest infestation and the necessary repairs. This approach upholds the principle of informed consent, allowing tenants to make a decision based on complete information. It also aligns with the ethical obligations of real estate agents to act honestly and with integrity, as stipulated by the Property Occupations Act and industry codes of conduct. By providing accurate information, the property manager avoids misleading potential tenants and ensures fair dealing, which is fundamental to maintaining trust and professional reputation. An approach that involves downplaying the severity of the pest infestation and the required repairs to encourage a quick lease signing is professionally unacceptable. This constitutes misleading conduct, violating the duty of honesty and transparency owed to prospective tenants under Queensland law. It also breaches the ethical obligation to act with integrity and avoid misrepresentation. Such actions could lead to a tenant breaking the lease due to unforeseen issues, resulting in financial loss for both the tenant and the landlord, and potential disciplinary action against the property manager. Another unacceptable approach is to only disclose the issues after a tenant has signed the lease agreement. This is a failure to provide essential information upfront, which is a prerequisite for informed decision-making. Tenants have a right to know the condition of the property before committing to a tenancy. Withholding this information until after the agreement is signed is deceptive and undermines the tenant's right to choose a suitable living environment. This also contravenes the spirit and letter of tenancy laws designed to protect tenants from entering into agreements under false pretenses. Finally, an approach that prioritizes the landlord's desire for a quick rental income over tenant welfare and legal disclosure requirements is also professionally unsound. While a property manager acts for the landlord, this duty does not supersede legal and ethical obligations to third parties, including prospective tenants. The Property Occupations Act 2014, QLD, mandates that agents must not engage in misleading or deceptive conduct. Failing to disclose material facts about the property's condition, even if it expedites a rental, is a direct contravention of this duty and can have serious legal and reputational consequences. The professional decision-making process for similar situations should involve a clear understanding of the property manager's legal and ethical obligations under Queensland legislation. This includes a commitment to transparency, honesty, and fair dealing with all parties. When faced with potential issues, the manager should gather all relevant information, assess its materiality to a prospective tenant, and ensure this information is communicated clearly and promptly. If there is any doubt about the materiality of an issue, it is always best practice to err on the side of disclosure. Seeking advice from legal counsel or industry bodies can also be beneficial in complex situations. Question 8. Research into a real estate agency's practices in Queensland, QLD, has revealed a situation where a vendor, when listing their property, explicitly instructs the agent to only show the property to potential buyers of a specific ethnic background, stating they believe these buyers will be more serious. What is the most appropriate and legally compliant course of action for the real estate agent in Queensland? Option A. Subtly suggest to the vendor that you will focus your marketing efforts on demographics that align with their preference, without explicitly stating discriminatory practices. Option B. Politely but firmly decline the vendor's request, explaining that such filtering is illegal and unethical under Queensland law, and proceed with marketing the property to all potential buyers. Option C. Agree to the vendor's request and then, after initiating contact with potential buyers, inform the vendor about the legal implications of their instructions. Option D. Agree to the vendor's request and attempt to identify and prioritize buyers from the specified ethnic background, while also marketing to the general public. The correct answer is B. Politely but firmly decline the vendor's request, explaining that such filtering is illegal and unethical under Queensland law, and proceed with marketing the property to all potential buyers. Explanation. This scenario presents a professional challenge because it requires balancing business interests with legal and ethical obligations under Queensland's fair housing and anti-discrimination laws. The agent must navigate potential client requests that could lead to discriminatory practices, which are strictly prohibited. Careful judgment is required to ensure all actions comply with the Anti-Discrimination Act 1991, QLD, and the principles of fair housing. The best professional approach involves politely but firmly declining the request to filter potential buyers based on their ethnicity. This is correct because it directly upholds the Anti-Discrimination Act 1991, QLD, which prohibits discrimination on the grounds of race, color, descent, national or ethnic origin, and other protected attributes in the provision of goods and services, including real estate. By refusing to act on the discriminatory instruction, the agent demonstrates a commitment to ethical conduct and legal compliance, protecting both themselves and their agency from potential penalties and reputational damage. This approach prioritizes the legal rights of all potential buyers and ensures a fair and open market. An approach that involves subtly steering the vendor towards buyers of a particular ethnicity would be professionally unacceptable. This is a direct contravention of the Anti-Discrimination Act 1991, QLD, as it facilitates and engages in discriminatory practices. It attempts to circumvent the law through indirect means, which is still a violation and carries significant legal and ethical risks. Another professionally unacceptable approach would be to agree to the vendor's request and attempt to find buyers of a specific ethnicity, while also marketing to the general public. This creates a dual standard and still involves the agent in a discriminatory process, even if not exclusively. The act of actively seeking out or favoring buyers based on ethnicity, even alongside general marketing, is a breach of the spirit and letter of anti-discrimination legislation. Finally, an approach that involves agreeing to the vendor's request and then explaining the legal ramifications to the vendor after the fact is also professionally flawed. While it might seem like a way to address the issue, the initial agreement to a discriminatory request is itself a breach of professional duty and legal obligation. The agent should proactively refuse discriminatory instructions before any action is taken. Professionals should adopt a decision-making framework that prioritizes legal compliance and ethical conduct. This involves understanding relevant legislation, such as the Anti-Discrimination Act 1991, QLD, recognizing discriminatory requests, and having a clear policy for refusing such requests while maintaining professional courtesy. The focus should always be on providing services equitably to all individuals, regardless of their background. Question 9. Which approach would be most appropriate for a Queensland real estate agent to recommend to a buyer who discovers the seller significantly misrepresented the property zoning, which was a key factor in the buyer's decision to purchase? Option A. Advise the buyer to immediately seek independent legal advice to understand their contractual rights and options regarding the misrepresentation. Option B. Guide the buyer to unilaterally terminate the contract based on the discovered misrepresentation. Option C. Suggest the buyer and seller negotiate a revised contract price to reflect the actual zoning without involving legal professionals. Option D. Recommend the buyer proceed with the purchase, trusting the seller to resolve the zoning discrepancy post-settlement. The correct answer is A. Advise the buyer to immediately seek independent legal advice to understand their contractual rights and options regarding the misrepresentation. Explanation. This scenario is professionally challenging because it involves a potential dispute over the enforceability of a contract due to a significant misrepresentation by the seller, impacting the buyer's understanding of the property's true value and intended use. Navigating this requires a deep understanding of Queensland's contract law principles, specifically concerning misrepresentation and its effect on contract enforceability. Careful judgment is required to determine the appropriate course of action that protects the buyer's interests while adhering to legal and ethical obligations. The best professional approach involves advising the buyer to seek independent legal advice regarding the enforceability of the contract and their options, such as rescission or damages, based on the misrepresentation. This is correct because the Queensland law of contract, particularly principles of misrepresentation, whether innocent, negligent, or fraudulent, dictates that a contract may be voidable if a material misstatement of fact induces a party to enter into it. The seller's misrepresentation about the property's zoning directly impacts its usability and value, making it a material fact. By recommending legal counsel, the agent facilitates a legally sound resolution that respects the buyer's rights under Queensland law. This approach upholds the agent's duty of care and ethical obligation to act in the client's best interest by ensuring they receive expert legal guidance on a complex contractual issue. An approach that involves the agent attempting to mediate a resolution between the buyer and seller, without advising the buyer to seek independent legal advice, is professionally unacceptable. This fails to acknowledge the severity of the misrepresentation and its potential to render the contract voidable under Queensland contract law. The agent is not qualified to provide legal advice, and attempting to resolve a contractual dispute of this nature without legal input could lead to the buyer waiving their rights or entering into an agreement that is not in their best interest, potentially exposing the agent to liability. Another unacceptable approach is to advise the buyer to proceed with the contract as is, assuming the seller will rectify the zoning issue later. This ignores the fundamental principle that a contract is based on the representations made at the time of agreement. The misrepresentation about zoning is a present fact that affects the contract's validity from its inception. Relying on future promises without addressing the current contractual defect is risky and does not align with protecting the buyer's immediate contractual rights under Queensland law. Finally, advising the buyer to terminate the contract unilaterally without understanding the legal implications of the misrepresentation and the terms of the contract itself is also professionally unsound. While termination might be an option, the specific legal grounds and procedures under Queensland law must be considered. The agent's role is not to dictate termination, but to guide the buyer towards obtaining the necessary legal advice to make an informed decision about their contractual obligations and remedies. Professionals should adopt a decision-making process that prioritizes client welfare and legal compliance. This involves 1. Identifying the core issue, contractual enforceability due to misrepresentation. 2. Recognizing the limits of their professional expertise, not providing legal advice. 3. Promptly advising the client to seek specialist advice, legal counsel in this instance. And 4. Facilitating the client's access to that advice. This ensures that decisions are made on a solid legal foundation, protecting all parties involved and upholding professional standards within the Queensland real estate framework. Question 10. Governance review demonstrates that a Queensland-based financial advisor is advising a client on the potential acquisition of units in a diversified Australian real estate investment trust, REIT. The REIT latest audited financial statements report total assets of $750 million, intangible assets of $75 million, and total liabilities of $200 million, with 150 million units currently on issue. An independent property valuation conducted 3 months ago indicates that the REIT property portfolio is currently valued at $50 million above its book value. The REIT current market price is $4.00 per unit. What is the most accurate net tangible asset, NTA, per unit for this REIT, reflecting its current underlying asset value? And what is the corresponding percentage difference between the NTA and the market price? Option A. The NTA per unit is $4.00, representing no discount or premium to the market price. Option B. The NTA per unit is $3.50, representing a 12.5% discount to the market price. Option C. The NTA per unit is $3.50, representing a 12.5% premium to the market price. Option D. The NTA per unit is $3.00, representing a 25% discount to the market price. The correct answer is B. The NTA per unit is $3.50, representing a 12.5% discount to the market price. Explanation. Scenario analysis. This scenario presents a professional challenge for a Queensland-based financial advisor due to the complex valuation and disclosure requirements associated with real estate investment trusts (REIT) under Australian Securities and Investments Commission, ASIC regulations, and the Corporations Act 2001, CTH. Advisors must ensure that the information provided to clients is accurate, not misleading, and reflects the true underlying value and risks of the investment, especially when dealing with potential conflicts of interest or differing valuation methodologies. The calculation of net tangible assets, NTA, is a critical metric for REIT, and its accurate determination is paramount for informed investment decisions. Correct approach analysis. The best professional approach involves calculating the NTA per unit using the most recent audited financial statements and adjusting for any material, unrecorded fair value movements in the REIT properties. This approach is correct because it adheres to the principles of providing accurate and not misleading information as mandated by ASIC regulatory guides, e.g., RG 183, RG 240, and the Corporations Act 2001, CTH. Specifically, it ensures that the valuation reflects the current market reality of the underlying assets, which is crucial for investors to assess the REIT true worth. The calculation would involve NTA equals total assets intangible assets total liabilities / number of units outstanding. For example, if a REIT has total assets of $500 million, intangible assets of $50 million, total liabilities of $150 million, and 100 million units outstanding, the basic NTA would be \NTA equals \frac $500 000 000 $50 000 000 $150 000 000 100 000 equals \frac $300 000 000 100 000 equals $3 0 $tax per unit \. If an independent valuation indicates that the properties are currently worth $50 million more than their book value, this adjustment would be made. Adjusted NTA equals basic NTA plus fair value uplift per unit. Adjusted NTA equals $3 0 plus $50 0 0 0 0 0 0 / 100 0 0 0 0 0 0 equals $3 0 0 plus $0 50 equals $3 50 per unit. This method provides a more realistic picture of the REIT intrinsic value. Incorrect approach is analysis. Using only the book value of assets without considering recent independent valuations is professionally unacceptable because it fails to provide a current and accurate representation of the REIT underlying asset value. This can lead to misleading investors about the true worth of their investment, potentially breaching disclosure obligations under the Corporations Act 2001, CTH, and ASIC guidance on financial product disclosure. Relying solely on the REIT reported earnings per unit (EPU) without calculating the NTA is also professionally flawed. EPU reflects profitability over a period, not the underlying asset value or the liquidation value of the trust, which is a key consideration for REIT investors. This omission can lead to an incomplete and potentially misleading assessment of the investment's fundamental value. Presenting a valuation based on a single, unverified analyst report without cross-referencing it with audited financials or independent property valuations is professionally risky. This approach lacks due diligence and could expose the advisor and client to significant risk if the analyst's report is inaccurate or biased, violating the duty to act with care and diligence. Professional reasoning. Professionals should adopt a systematic approach to REIT valuation. This involves 1. Obtaining and thoroughly reviewing the latest audited financial statements. 2. Identifying and obtaining recent independent valuations of the REIT core property assets. 3. Calculating the NTA per unit, incorporating any material fair value adjustments from independent valuations. 4. Comparing the calculated NTA with the current market price of the REIT units to assess potential undervaluation or overvaluation. 5. Disclosing all assumptions and methodologies used in the valuation to the client, ensuring transparency. 6. considering other relevant factors such as management quality, leasing profiles, and economic outlook for the property sector. Question 11. Operational review demonstrates that a licensed real estate agent in Queensland, who is exclusively representing a seller for a property, is approached by a potential buyer interested in purchasing that same property. The buyer is not currently represented by an agent. What is the most appropriate and legally compliant course of action for the agent in this situation? Option A. Act as the buyer's agent for the property, focusing on securing the best possible price for the buyer, without disclosing their existing agency relationship with the seller. Option B. Inform the buyer that as the seller's exclusive agent, they cannot represent the buyer's interest in this transaction due to a conflict of interest, and offer to refer the buyer to another licensed agent who can provide independent representation, or advise the buyer to seek their own representation. Option C. Provide the potential buyer with insights into the seller's minimum acceptable price and negotiation strategy to help the buyer make a competitive offer. Option D. Agree to represent both the seller and the buyer in the transaction, believing it will expedite the sale, without seeking explicit consent from either party for dual agency. Correct answer is B. Inform the buyer that as the seller's exclusive agent, they cannot represent the buyer's interests in this transaction due to a conflict of interest, and offer to refer the buyer to another licensed agent who can provide independent representation, or advise the buyer to seek their own representation. Explanation. Scenario analysis. This scenario presents a common ethical and legal challenge in Queensland real estate, where an agent might be approached by a potential buyer for a property they are already listing for the seller. The professional challenge lies in navigating the agent's fiduciary duties to the seller, while also potentially assisting the buyer, without creating conflicts of interest or breaching disclosure obligations under Queensland's Property Occupations Act 2014, QLD, and associated regulations. Careful judgment is required to ensure all parties are treated fairly and legally. Correct approach analysis. The best professional practice involves clearly identifying the agent's existing relationship with the seller and explaining that they cannot act as a buyer's agent for this specific property due to the conflict of interest. The agent should then offer to refer the buyer to another licensed agent who can represent their interests independently, or advise the buyer to seek independent representation. This approach upholds the agent's primary duty to their seller, avoids misrepresentation, and ensures the buyer receives appropriate, unbiased representation. This aligns with the principles of agency law and the ethical obligations under the Property Occupations Act 2014, QLD, which mandates agents to act in the best interests of their client, the seller in this case, and to avoid conflicts of interest. Incorrect approaches analysis. One incorrect approach is to agree to represent both the seller and the buyer in the transaction without full disclosure and consent. This constitutes dual agency without proper adherence to legal requirements. Under Queensland law, dual agency requires informed consent from both parties after full disclosure of the potential conflicts. Proceeding without this consent is a breach of the agent's duty to the seller and potentially misleading to the buyer, violating sections of the Property Occupations Act 2014, QLD, concerning conflicts of interest and disclosure. Another incorrect approach is to provide the buyer with confidential information about the seller's negotiating position or the minimum acceptable price, even if done with the intention of facilitating a sale. This directly breaches the agent's fiduciary duty to the seller to act in their best interests and to maintain confidentiality. Such actions would contravene the agent's obligations under the Property Occupations Act 2014, QLD, and common law duties owed to the seller. A third incorrect approach is to act as a buyer's agent for the property without disclosing their existing seller's agency relationship to the buyer. This is deceptive and creates a significant conflict of interest. The buyer is led to believe they have independent representation when, in fact, the agent is bound by duties to another party in the same transaction, potentially compromising their ability to negotiate effectively for the buyer. This violates disclosure requirements and the duty to avoid conflicts of interest under Queensland legislation. Professional reasoning. Professionals should adopt a framework that prioritizes clear identification of their client and their obligations. When a potential conflict arises, such as a buyer approaching an agent already representing a seller, the agent must first assess their existing contractual and legal obligations. The primary duty is to the current client. Any action that could compromise this duty or create a conflict of interest must be avoided. Transparency and informed consent are paramount. If dual agency is contemplated, all legal and ethical requirements for disclosure and consent must be meticulously followed. If these cannot be met, the agent should decline to act for the buyer in that specific transaction and offer appropriate referrals. Question 12. Stakeholder feedback indicates a Queensland real estate agent is assisting a first home buyer who has secured a loan with a high loan-to-value ratio, and the lender has stipulated the requirement of private mortgage insurance, PMI. What is the most professional and ethically sound approach for the agent to manage this situation? Option A. Inform the buyer that private mortgage insurance is a standard lender requirement and that the agency has no further obligation to explain its details or implications. Option B. Advise the buyer that private mortgage insurance is an optional extra that the agency can help them negotiate with the lender to potentially reduce or remove. Option C. Proactively and comprehensively explain the nature, purpose, and cost of private mortgage insurance to the buyer, detailing its role as a lender requirement and the borrower's responsibility for the cost. Option D. Downplay the significance of private mortgage insurance, focusing only on the loan approval and suggesting the buyer can address any concerns directly with the lender at a later stage. The correct answer is C. Proactively and comprehensively explain the nature, purpose, and cost of private mortgage insurance to the buyer, detailing its role as a lender requirement and the borrower's responsibility for the cost. Explanation. Scenario analysis. This scenario presents a professional challenge for a Queensland real estate agent because it requires navigating the complexities of private mortgage insurance, PMI, in the context of a specific client's financial situation and the regulatory environment in Queensland. The agent must balance the client's desire for homeownership with the lender's requirements and the potential implications of PMI, ensuring transparency and adherence to the Property Occupations Act 2014, QLD, and relevant Australian consumer protection laws. Misinterpreting or miscommunicating information about PMI can lead to significant client dissatisfaction, potential financial detriment, and breaches of professional conduct. Correct approach analysis. The best professional practice involves proactively and comprehensively explaining the nature, purpose, and cost of private mortgage insurance to the buyer. This includes detailing when it is typically required by lenders, e.g., high loan-to-value ratios, how it protects the lender, and that the cost is usually borne by the borrower. The agent should clearly articulate that PMI is a lender requirement, not a service provided by the real estate agency, and that the buyer has the right to understand all associated costs before committing to the purchase. This approach aligns with the ethical obligations under the Property Occupations Act 2014, QLD, to act honestly, fairly, and in the best interests of the client, and to provide accurate information. It also upholds the principles of informed consent and transparency crucial in property transactions. Incorrect approach is analysis. Failing to fully disclose the implications of private mortgage insurance, particularly its cost and purpose, constitutes a failure to act honestly and transparently, potentially misleading the buyer about the total financial commitment. This breaches the duty to provide accurate information as required by Queensland legislation. Suggesting that private mortgage insurance is an optional add-on or a service the agency can influence or waive is misleading. PMI is a lender-driven requirement, and misrepresenting its nature can lead the buyer to make decisions based on false premises, violating consumer protection principles. Focusing solely on the fact that the lender requires private mortgage insurance without explaining what it is, why it's required, and who bears the cost, leaves the buyer uninformed. This lack of comprehensive explanation prevents the buyer from making a truly informed decision, which is a cornerstone of ethical real estate practice in Queensland. Professional reasoning. Professionals should adopt a client-centric approach, prioritizing clear and comprehensive communication. When dealing with financial instruments like private mortgage insurance, the decision-making process should involve 1. Identifying all relevant costs and requirements associated with the transaction. 2. Understanding the client's financial capacity and objectives. 3. Clearly explaining complex financial elements in an understandable manner, including their purpose, implications, and who is responsible for them. 4. Ensuring the client has all necessary information to provide informed consent. 5. adhering strictly to the disclosure obligations under the Property Occupations Act 2014, QLD, and other applicable consumer laws. Question 13. The audit findings indicate that a real estate agent in Queensland, acting for a seller, has been approached by a potential buyer who has noticed a slight crack in a wall and is inquiring about the property's structural integrity. The agent is aware that this crack has been present for some time and is likely cosmetic, but the buyer seems genuinely concerned. What is the most appropriate course of action for the agent to take in this situation? Adhering to Queensland's property laws and ethical standards. Option A. Immediately advise the buyer to obtain an independent building inspection without first discussing the buyer's specific concern or the crack with the seller. Option B. Downplay the significance of the crack to the buyer, assuring them it is likely cosmetic and has been there for a while, to avoid alarming them and potentially jeopardizing the sale. Option C. Ignore the buyer's question about the crack and continue marketing the property, assuming the buyer will conduct their own due diligence if they are serious about purchasing. Option D. Inform the seller about the buyer's specific concern regarding the crack and the property's structural integrity, and advise the seller on their disclosure obligations, while also acknowledging the buyer's concern and suggesting they obtain a professional building inspection if they wish. Correct answer is D. Inform the seller about the buyer's specific concern regarding the crack and the property's structural integrity, and advise the seller on their disclosure obligations, while also acknowledging the buyer's concern and suggesting they obtain a professional building inspection if they wish. Explanation. The audit findings indicate a potential breach of trust and disclosure obligations within a Queensland real estate brokerage. This scenario is professionally challenging because it requires the agent to balance their fiduciary duty to the seller with the potential for a more favorable outcome for the buyer, while strictly adhering to the disclosure requirements under Queensland's Property Occupations Act 2014. The agent must navigate the delicate line between providing helpful information and engaging in conduct that could be construed as acting against their client's best interests or misrepresenting the property's condition. The best professional practice involves the agent acting with utmost good faith and transparency towards their client, the seller, while also fulfilling their statutory disclosure obligations to potential buyers. This approach prioritizes the agent's primary duty to their seller, which includes obtaining the best possible price and terms, but crucially, it mandates that any information shared with a buyer is accurate, not misleading, and does not undermine the seller's position. Specifically, if the agent is aware of a significant defect that is not readily apparent, they have a legal and ethical obligation to disclose this to the buyer, as per the Property Occupations Act 2014, and to inform their seller of this disclosure. This ensures compliance with disclosure laws and maintains professional integrity, an approach where the agent downplays the significance of the structural issue to the buyer, hoping to secure the sale without alerting the seller to the buyer's heightened concern, fails to uphold the agent's duty of good faith to the seller. It also risks misleading the buyer if the issue is more serious than presented. Furthermore, failing to inform the seller about the buyer's specific concerns about the structural issue breaches the agent's duty to keep the seller informed of all material matters relating to the sale. Another unacceptable approach is for the agent to directly advise the buyer to obtain an independent building inspection, without first discussing the structural issue with their seller and obtaining instructions. While encouraging inspections is generally good practice, doing so in this context, without informing the seller of the buyer's specific concern and the agent's intent, could be seen as implicitly suggesting a problem exists without the seller's knowledge or consent, potentially undermining the seller's confidence in the agent. Finally, an agent who simply ignores the buyer's question about the structural issue and proceeds with marketing the property as is, without any further investigation or disclosure, is failing in their duty to both the buyer and the seller. They are not fulfilling their obligation to disclose known defects to the buyer, nor are they keeping their seller fully informed about potential impediments to the sale or buyer concerns. Professionals should adopt a decision-making framework that prioritizes their fiduciary duties to their client, coupled with strict adherence to statutory disclosure requirements. This involves open communication with the seller, accurate and transparent communication with potential buyers regarding known material facts, and seeking clear instructions from the seller when faced with complex situations or potential conflicts. Question 14. The efficiency study reveals that a real estate agent in Queensland is representing a seller who who is eager to sell their property quickly. The seller suggests that the agent tell potential buyers that the property has never had any water ingress issues, even though the agent is aware of a minor leak that was repaired last year. The seller believes this statement will expedite the sale. What is the most appropriate course of action for the real estate agent in Queensland? Option A. Politely refuse to make the statement, explaining to the seller that it would be unethical and potentially illegal to misrepresent the property's history, and offer to accurately disclose the previous repair. Option B. Agree to the seller's request and state to potential buyers that the property has never had any water ingress issues to facilitate a faster sale. Option C. Suggest to the seller that the agent can state the property has no current water ingress issues, implying a lack of past problems. Option D. Remain silent and allow the seller to make the statement directly to potential buyers without the agent's input or correction. The correct answer is A. Politely refuse to make the statement, explaining to the seller that it would be unethical and potentially illegal to misrepresent the property's history, and offer to accurately disclose the previous repair. Explanation. This scenario presents a professional challenge for a real estate agent in Queensland due to the inherent conflict between a client's desire and the agent's duty to act ethically, and in accordance with the Property and Stock Agents Act 2002, QLD, and its associated regulations. The agent must navigate the potential for misrepresentation and the obligation to ensure all parties are fully informed, particularly when a seller is pushing for a misleading statement. Careful judgment is required to uphold professional integrity and legal compliance. The best professional approach involves the agent politely but firmly refusing to make the misleading statement. The agent should explain to the seller that making such a representation would be unethical and potentially illegal, as it could mislead prospective buyers and violate their duty of disclosure under Queensland law. The agent's primary obligation is to act honestly and fairly, and to ensure that all representations made about the property are accurate and verifiable. This aligns with the principles of professional conduct expected of licensed agents in Queensland, which emphasize transparency and truthfulness in all dealings. An incorrect approach would be for the agent to agree to the seller's request and make the misleading statement about the property's condition. This directly contravenes the agent's duty of honesty and fair dealing, and could lead to breaches of the Property and Stock Agents Act 2002, QLD, potentially resulting in disciplinary action, fines, or loss of license. It also exposes the seller and the agent to legal liability if a buyer relies on the false information to their detriment. Another incorrect approach would be for the agent to remain silent and allow the seller to make the misleading statement directly to a potential buyer without intervention. While the agent isn't making the statement themselves, their silence in the face of a known misrepresentation by their client can be interpreted as complicity or a failure to uphold their duty to ensure fair dealings. This passive approach still risks misleading buyers and failing to meet the standards of professional conduct. A further incorrect approach would be for the agent to suggest a vague or ambiguous statement that hints at the seller's desired outcome without explicitly stating it. This is a form of deceptive practice, as it attempts to circumvent the spirit of the law while still potentially misleading buyers. Agents have a positive obligation to ensure clarity and accuracy, not to engage in wordplay that could be misinterpreted. The professional decision-making process for similar situations should involve a clear understanding of the agent's legal and ethical obligations under Queensland legislation. When faced with a client's request that conflicts with these duties, the agent should first identify the specific legal or ethical principle being challenged. They should then communicate clearly and professionally with the client, explaining the reasons why the request cannot be fulfilled, citing relevant regulations or ethical codes. If the client insists, the agent must be prepared to withdraw from the agency agreement if they cannot act ethically and legally. Question 15. The evaluation methodology shows that a real estate principal in Queensland is advising a client who wishes to sell their residential property. The client is keen to achieve the widest possible market exposure, but is also concerned about ensuring the agent is fairly compensated for their marketing efforts and buyer introductions, even if the client ultimately finalizes the sale through another party or independently. Considering the Property Occupations Act 2014, QLD, which of the following listing agreement structures best balances the client's objectives with the agent's entitlement to commission? Option A. An exclusive right to sell agreement where the agent's commission is forfeited if the seller decides to withdraw the property from the market before a sale is achieved, irrespective of marketing expenditure or buyer interest generated. Option B. An exclusive right to sell agreement where the agent is entitled to commission if the property is sold to a buyer introduced by the agent or who inspected the property during the agency period, regardless of who conducted the final sale, with a defined protection period post-termination. Option C. An exclusive agency agreement where the agent is only entitled to commission if they personally conduct the sale, and the seller can market the property independently without any commission obligation. Option D. An open listing agreement where the seller can appoint multiple agents and sell the property themselves without any obligation to inform the appointed agents or pay commission. The correct answer is B. An exclusive right to sell agreement where the agent is entitled to commission if the property is sold to a buyer introduced by the agent or who inspected the property during the agency period, regardless of who conducted the final sale, with a defined protection period post-termination. Explanation. The evaluation methodology shows that understanding the nuances of listing agreements is crucial for real estate agents in Queensland to ensure compliance with the Property Occupations Act 2014, QLD, and its associated regulations, as well as to maintain ethical standards and client trust. This scenario is professionally challenging because it requires the agent to balance the client's desire for broad marketing with the agent's need for a secure commission, all while adhering to legal and ethical obligations. A misstep can lead to disputes, loss of commission, and damage to the agent's reputation. The best approach involves clearly defining the scope of the agent's appointment and the circumstances under which a commission is earned, ensuring transparency and fairness for both parties. This aligns with the principles of good faith and honest dealing expected of licensed agents under Queensland law. Specifically, an agreement that clearly outlines that the agent is entitled to a commission if the property is sold to a buyer introduced by the agent or who inspected the property during the agency period, regardless of who conducted the final sale, provides the agent with appropriate protection while still allowing the seller flexibility. This type of agreement, often referred to as an exclusive right to sell with a defined protection period, is permissible and provides a reasonable balance. It ensures the agent is compensated for their marketing efforts and introduction of potential buyers, as mandated by the spirit of fair dealing and agency agreements under the Property Occupations Act 2014, QLD. An approach that limits the agent's commission entitlement solely to sales conducted by the agent themselves, even if the seller wishes to engage another agent, fails to adequately protect the agent's investment in marketing and buyer introduction. This could be seen as a failure to secure a fair outcome for the agent's efforts, potentially contravening the expectation of reasonable compensation for services rendered. Furthermore, an agreement that allows the seller to withdraw the property from sale at any time without any form of compensation to the agent, despite the agent having incurred marketing expenses and introduced potential buyers, could be viewed as unethical and potentially in breach of implied terms of cooperation and good faith, even if not explicitly prohibited by the Act. Lastly, an agreement that grants the seller the right to market the property independently without any obligation to inform the agent or pay a commission, even if the property is sold to a buyer the agent introduced, fundamentally undermines the purpose of an agency agreement and the agent's entitlement to commission for their role in facilitating the sale. This approach would likely lead to disputes and is contrary to the principles of fair agency practice. Professionals should adopt a decision-making process that prioritizes clear communication, legal compliance, and ethical conduct. This involves thoroughly understanding the client's objectives, explaining the implications of different listing agreement types, and ensuring the chosen agreement accurately reflects the agreed-upon terms and provides fair compensation for the agent's services, all within the framework of Queensland's property laws. Question 16. Strategic planning requires a real estate agent in Queensland to carefully review a proposed residential lease agreement for a property in Brisbane. The draft agreement includes a clause stating that rent will be reviewed annually, with increases to be determined by the lessor based on market conditions. The agent notes this clause and also observes several other special terms that are not standard. What is the most appropriate course of action for the agent to ensure compliance with Queensland's residential tenancy laws? Option A. Advise the tenant to seek independent legal advice on the special terms before signing, without independently verifying the legality of the rent increase clause. Option B. Proceed with the lease agreement as drafted, assuming the lessor's proposed rent increase mechanism is acceptable and the special terms are standard practice in the Brisbane market. Option C. Scrutinize the rent increase clause and all special terms to ensure they comply with the Residential Tenancies and Rooming Accommodation Act 2008, QLD, and are clearly understood by both parties, seeking clarification from the lessor if necessary. Option D. Focus solely on the rent increase clause, ensuring it is lawful, and overlook the other special terms as they are likely minor variations. The correct answer is C. Scrutinize the rent increase clause and all special terms to ensure they comply with the Residential Tenancies and Rooming Accommodation Act 2008, QLD, and are clearly understood by both parties, seeking clarification from the lessor if necessary. Explanation. This scenario presents a professional challenge due to the potential for misinterpretation of lease terms, which can lead to disputes, financial losses, and damage to professional reputation. The Queensland residential tenancy legislation, specifically the Residential Tenancies and Rooming Accommodation Act 2008, QLD, governs these agreements and mandates specific disclosures and obligations for lessors and agents. Careful judgment is required to ensure compliance and protect the interests of all parties. The best approach involves a thorough review of the proposed lease agreement, identifying any clauses that deviate from standard terms or introduce unusual conditions. This includes scrutinizing the rent increase mechanism to ensure it aligns with the Act's provisions regarding rent increases, which typically require specific notice periods and cannot be arbitrary. The agent must also verify that any special terms are lawful and do not contravene the tenant's rights under the Act. This proactive identification and clarification of potentially problematic clauses before signing ensures transparency, compliance with the Residential Tenancies and Rooming Accommodation Act 2008, QLD, and fosters a fair and legally sound tenancy. An approach that overlooks the rent increase clause, assuming it is standard, fails to uphold the agent's duty of care and compliance with the Residential Tenancies and Rooming Accommodation Act 2008, QLD. The Act sets strict rules around when and how rent can be increased, and a failure to verify this could lead to an unlawful rent increase, exposing the lessor and agent to penalties and disputes. Another unacceptable approach is to proceed with the lease without clarifying the tenant's understanding of the special conditions. This neglects the principle of informed consent and can lead to future disputes if the tenant feels misled or unaware of their obligations. The agent has a responsibility to ensure all parties understand the terms of the agreement, particularly those that might be considered non-standard. Finally, an approach that prioritizes securing the lease agreement quickly over ensuring the clarity and legality of its terms is professionally unsound. While efficiency is important, it must not come at the expense of regulatory compliance and ethical practice. The agent's primary responsibility is to facilitate a lawful and fair agreement, not merely to complete a transaction. Professionals should adopt a decision-making process that prioritizes understanding the relevant legislation. In this case, the Residential Tenancies and Rooming Accommodation Act 2008, QLD, meticulously reviewing all lease provisions, identifying potential ambiguities or noncompliance, seeking clarification from the lessor or legal counsel if necessary, and ensuring all parties have a clear and informed understanding of their rights and obligations before signing any agreement. Question 17. Market research demonstrates that the Queensland real estate market is experiencing fluctuating property values and increasing interest rates. A loan underwriter is reviewing an application for a residential mortgage. The applicant has provided documentation for their income and stated their monthly expenses. The property's market valuation has been obtained. What is the most appropriate course of action for the underwriter to ensure compliance with responsible lending obligations under Australian law? Option A. Approve the loan based on the applicant's stated income and the provided property valuation, assuming their stated expenses are accurate. Option B. Proceed with loan approval if the property valuation significantly exceeds the loan amount requested, regardless of the applicant's income verification. Option C. Accept the applicant's self-reported monthly expenses without further investigation, as this is a personal financial matter. Option D. Independently verify the applicant's stated income through payslips and bank statements. cross-reference their stated expenses with industry benchmarks and their bank statements, and ensure the loan-to-value ratio is within acceptable lending policy for the Queensland market. The correct answer is D. Independently verify the applicant's stated income through payslips and bank statements, cross-reference their stated expenses with industry benchmarks and their bank statements, and ensure the loan-to-value ratio is within acceptable lending policy for the Queensland market. Explanation: this scenario is professionally challenging because it requires a loan underwriter to balance the lender's risk appetite with the applicant's financial capacity and the specific requirements of Queensland's property market and lending regulations. The underwriter must ensure compliance with the National Credit Code, NCC, and relevant Australian Securities and Investments Commission, ASIC guidelines, particularly concerning responsible lending obligations, without resorting to assumptions or overlooking critical disclosure requirements. The best professional approach involves a thorough review of all submitted documentation, including verifying the applicant's income stability, assessing their debt-to-income ratio against Queensland's property market norms, and confirming the accuracy of the property valuation. This approach directly addresses the core of responsible lending by ensuring the loan is suitable and affordable for the borrower, thereby mitigating risk for both the lender and the borrower, and adhering to the spirit and letter of the NCC and ASIC regulatory guides. It prioritizes factual verification and a holistic assessment of the applicant's financial situation in the context of the Queensland property market. An approach that relies on the applicant's stated income without independent verification fails to meet responsible lending obligations. This is a direct contravention of the NCC, which mandates that lenders make reasonable inquiries and take reasonable steps to verify the borrower's financial situation. Similarly, approving a loan based solely on the property's market value, without a comprehensive assessment of the borrower's ability to repay, ignores the fundamental principle of affordability and increases the risk of default, which is contrary to ASIC guidance on responsible lending. Lastly, accepting the applicant's self-assessment of their expenses without any supporting evidence or cross-referencing is an insufficient due diligence step, potentially leading to an inaccurate understanding of the borrower's capacity to service the loan and a breach of regulatory expectations. Professionals should employ a structured decision-making process that begins with understanding the regulatory landscape, NCC, ASIC RG 209. This is followed by a systematic collection and verification of all relevant applicant and property information. The assessment should then focus on affordability, capacity, and suitability, considering both quantitative data and qualitative factors specific to the Queensland market. Finally, a clear, documented rationale for the approval or rejection should be established, ensuring transparency and compliance. Question 18. The assessment process reveals that a licensed real estate agent in Queensland is approaching their license renewal date and has not yet confirmed completion of their mandatory continuing professional development, CPD, points for the current cycle. They are also unsure if their recent attendance at a national industry conference adequately covers the specific CPD requirements set by the Queensland Office of Fair Trading. What is the most prudent course of action for the agent to ensure continued compliance? Option A. Immediately verify the specific CPD requirements for Queensland real estate agents with the Office of Fair Trading and confirm if the national conference attendance meets these criteria, while also scheduling any outstanding CPD activities to be completed before the license renewal deadline. Option B. Delegate the task of confirming CPD compliance and completing any necessary additional training to an administrative assistant, trusting their judgment to handle the matter. Option C. Assume that the National Industry Conference attendance, being a significant event, will satisfy the CPD requirements and focus solely on completing the license renewal paperwork. Option D. Contact the Office of Fair Trading only if the license renewal cannot be processed due to missing CPD information, hoping to rectify the situation at that point. The correct answer is A. Immediately verify the specific CPD requirements for Queensland real estate agents with the Office of Fair Trading and confirm if the national conference attendance meets these criteria, while also scheduling any outstanding CPD activities to be completed before the license renewal deadline. Explanation: the assessment process reveals a common challenge in the Queensland real estate industry: maintaining compliance with licensing and continuing professional development, CPD, obligations while managing a demanding workload. This scenario is professionally challenging because a lapse in these requirements can lead to significant regulatory penalties, reputational damage, and the inability to legally practice. Careful judgment is required to ensure that professional obligations are not overlooked amidst daily operational pressures. The best professional approach involves proactively scheduling and tracking all licensing renewal and CPD requirements well in advance of their expiry dates. This includes understanding the specific CPD points required by the Queensland Office of Fair Trading (OFT) for real estate agents and ensuring that all completed activities are accurately recorded and verifiable. This proactive strategy ensures continuous compliance, minimizes the risk of accidental noncompliance, and demonstrates a commitment to professional standards as mandated by the Property and Other Services Act 1928, QLD, and associated regulations. Adhering to these requirements is not merely a procedural step, but a fundamental ethical obligation to protect consumers and maintain the integrity of the profession. An approach that relies on last-minute efforts to complete CPD or renew a license is professionally unacceptable. This often leads to rushed, potentially incomplete, or non-compliant professional development activities, failing to meet the spirit and letter of the OFT's requirements. It also creates a high risk of missing renewal deadlines, resulting in an expired license and the inability to conduct business legally, which is a direct contravention of the Act. Another unacceptable approach is to assume that CPD completed for other professional bodies or in previous years automatically satisfies Queensland's specific requirements. Each jurisdiction and profession often has unique CPD frameworks. Failing to verify that the completed activities align with the OFT's guidelines for real estate agents in Queensland constitutes a significant regulatory failure and an ethical lapse in due diligence. Finally, delegating the sole responsibility for tracking and fulfilling licensing and CPD obligations to administrative staff without adequate oversight or verification is also professionally unsound. While delegation is a valid management tool, the ultimate responsibility for compliance rests with the licensed individual. Without a robust verification process, the risk of errors or omissions increases, potentially leading to noncompliance and its associated consequences. Professionals should adopt a systematic approach to compliance management. This involves creating a personal compliance calendar, regularly reviewing OFT guidelines for any updates, seeking clarification from the OFT when unsure, and maintaining meticulous records of all completed CPD activities. A commitment to ongoing learning and adherence to regulatory frameworks is paramount for ethical and successful practice in the Queensland real estate market. Question 19. System analysis indicates a mortgage broker in Queensland is advising a client whose income fluctuates significantly from month to month due to the nature of their self-employment. The client is seeking a mortgage and has expressed interest in a product that offers the most flexibility in terms of initial repayment amounts. What is the most prudent approach for the broker to recommend, considering the client's financial circumstances and regulatory obligations? Option A. An adjustable rate mortgage which may have a lower initial interest rate that can change over time. Option B. An interest-only mortgage allowing the client to pay only the interest for an initial period. Option C. A fixed-rate mortgage which offers consistent principal and interest repayments throughout the loan term. Option D. A combination of an adjustable rate mortgage with a short interest-only period to minimize initial cash outflow. The correct answer is C. A fixed-rate mortgage, which offers consistent principal and interest repayments throughout the loan term. Explanation. Scenario analysis. This scenario presents a professional challenge for a Queensland mortgage broker advising a client with fluctuating income. The core difficulty lies in accurately assessing the client's long-term capacity to service a mortgage, given the inherent unpredictability of their income stream. A broker must balance the client's desire for a specific loan product with the regulatory obligation to ensure the loan is suitable and the client is not placed in undue financial hardship. This requires a deep understanding of different mortgage structures and their implications for borrowers with variable financial circumstances, as well as adherence to the National Credit Code and relevant Australian Securities and Investments Commission (ASIC) guidelines. Correct approach analysis. The most appropriate approach involves recommending a fixed-rate mortgage. This approach is correct because it provides the client with payment certainty, which is crucial for managing a budget when income is variable. A fixed-rate mortgage ensures that the principal and interest repayments remain constant for the entire loan term, regardless of market interest rate fluctuations. This predictability allows the client to better plan their finances and avoid the stress of potentially increasing repayments that could arise with an adjustable-rate mortgage, especially during periods of lower income. From a regulatory perspective, recommending a fixed-rate mortgage aligns with the responsible lending obligations under the National Credit Code, which mandates that lenders, and by extension, their brokers, must take reasonable steps to ensure a loan is suitable for the borrower. Providing a stable repayment schedule is a key component of ensuring suitability for someone with an unpredictable income. Incorrect approaches analysis. Recommending an adjustable-rate mortgage without significant caveats would be professionally unacceptable. While it might offer a lower initial interest rate, the risk of future interest rate increases, coupled with the client's variable income, creates a substantial risk of repayment stress and potential default. This fails to meet the responsible lending obligations by exposing the client to undue financial risk. Similarly, recommending an interest-only mortgage, even if fixed rate, would also be problematic. While it reduces immediate repayment pressure, it does not address the principal repayment over time and can lead to a significant debt burden at the end of the interest-only period, which may be unsustainable for a client with a fluctuating income. This approach does not adequately consider the client's long-term financial well-being and could be seen as a failure to assess the borrower's capacity to repay the loan in full. Recommending a mortgage product that does not adequately account for the client's specific financial circumstances and risk profile, and which could lead to hardship, is a breach of ethical and regulatory standards. Professional reasoning. Professionals should adopt a client-centric approach, prioritizing the client's financial well-being and capacity to service the loan over simply facilitating a transaction. This involves a thorough assessment of the client's income stability, expenses, and risk tolerance. When faced with variable income, the default consideration should be for products that offer repayment certainty. If variable rate or interest-only options are explored, it must be with a comprehensive analysis of the client's ability to absorb potential increases in repayments and a clear understanding of the long-term repayment strategy. This requires diligent fact-finding, clear communication of risks and benefits, and a commitment to recommending only those products that demonstrably meet the client's needs and are within their repayment capacity, in accordance with the National Credit Code. Question 20. The monitoring system demonstrates that a Queensland real estate agent has negotiated a sale where their gross commission is $33,000. The agent is registered for GST. What is the correct amount of GST the agent must remit to the Australian Taxation Office (ATO) from this commission, assuming the commission is a taxable supply? Option A, $3,000. Option B, $2,500. Option C, $2,700. Option D, $3,300. The correct answer is A, $3,000. Explanation. This scenario presents a common implementation challenge for real estate agents in Queensland, accurately calculating and disclosing goods and services tax (GST) implications on commission. The challenge lies in ensuring compliance with the Australian Taxation Office (ATO) guidelines and the Queensland Office of Fair Trading (OFT) requirements for transparent financial dealings, while also maintaining profitability. Miscalculations can lead to financial penalties, reputational damage, and breaches of professional conduct. The correct approach involves a precise calculation of the GST component on the agent's commission, ensuring this is clearly communicated to the client and correctly remitted to the ATO. This aligns with the principles of transparency and financial integrity, mandated by both the ATO and the Queensland OFT. Specifically, the agent must understand that their commission is a taxable supply and that they are required to issue a tax invoice if their annual turnover exceeds the GST registration threshold. The calculation must be based on the gross commission received, with the GST amount being /frac/text gross commission 11 /. This ensures that the client is aware of the GST component and that the agent correctly accounts for their tax obligations. An incorrect approach would be to simply deduct a flat percentage for GST without a proper calculation, or to absorb the GST into the commission without disclosing it. This fails to meet the ATO's requirements for tax invoices and accurate GST reporting. It also breaches the ethical obligation to be transparent with clients about all financial aspects of the transaction. Another incorrect approach is to assume the client is responsible for GST on the commission without clear agreement or disclosure, which misrepresents the agent's tax liability and can lead to disputes. Failing to register for GST when turnover thresholds are met is also a significant regulatory failure, exposing the agent to penalties. Professionals should approach such situations by first confirming their GST registration status with the ATO. They should then understand the GST treatment of their commission as a taxable supply. When quoting or agreeing on commission, they should clearly distinguish between the gross commission and the GST component, or state that the commission is inclusive of GST. All financial documentation, including invoices and agreements, must accurately reflect the GST amount. Regular review of ATO guidelines and consultation with a tax professional are crucial for maintaining compliance.